Look at Bitcoin briefly, dipping below 19,000 this morning, hitting its lowest level in about 3 months. The cryptocurrency ended the day back above that level, but the chart master thinks it will not stay there for long. Carter Worth of Worth Charting here. Carter, where's Bitcoin going?
Well, we shall see, but certainly not for the faint of heart. Before looking at the charts, what we do know, of course, is it basically topped the same time the S&P topped. Last part of last year, early part of this year, it bottomed almost on the same day. Its bottom was June 18th, S&P was June 17th. And yet all of the trading since the bottom feels like just a pause before moving lower. Let's look at a chart or two and see if we can figure it out. So that's one way to draw the lines. We see that low on June 18th, it moved as much as 40% off the low, S&P moving 20, but we're reapproaching that level sort of dangerously, just as certain stocks have. If we pull that back a little further, that's a 3-month chart. The 6-month chart looks at it in more relief, but you can see again, we're working into what you would call the apex of that formation, which is to say, you can't just sit here and go flat. You either come to life in a big way or you break down. We're in the latter camp, we think it breaks down. Now looking at some long-term charts, the key level, and everyone knows this, is where we are in relation to both the trend line in effect for the past 2 years and also the 2017 high. And so you'll see that on the final chart. What this does is this shows where we are. We're at support, so to speak. It's the 20,000 level plus minus, but we've been backing and filling here since that June 18th low when we pierced below the 20,000, reaching as low as 17. And so the fight is on, whether this is going to make it, so to speak, going to survive this and then head higher, or it's just simply the pause, having dropped 75% before it ultimately goes lower. That's my thinking, that we break to the downside.
Got it. Carter Worth. Carter, thank you. Let's trade it. BK, of course, over to you. What do you think?
Yeah, listen, I'm sympathetic to what Carter, first of all, he's the best chartist that I know.
Well,
secondarily, when you look at the fundamentals, when you look at the fundamentals behind Bitcoin, it wouldn't really get cheap until 15,000 and then super cheap like it was as cheap as it was at the March 2020 lows until about 10,500. So there's a lot of room on the downside before you get some kind of
how do you put a valuation
based on address growth. Based on address growth and Metcalfe's law, you can do a little. We have a proprietary formula that tells us whether it's cheap or expensive. So that's what I'm talking about on that, because it's really just network effect. So if we look at that, and then we look at the macro environment, and Carter was right to point out that it's correlated with the S&P 500 and the Nasdaq almost 70% of the time for almost the last year. So really, until that breaks, you're basically looking at kind of a doubled levered ETF on the Nasdaq futures. I think there's a lot of reasons why it should break. It just hasn't yet, and so we have to wait until that point.
What about this? What about these Bitcoin short ETFs, the inverse ETF, BITI? It's up 71% this year. Is that a safe way to go? Well, safe is maybe the wrong word.
Well, yeah, I'm not sure I would say anything about Bitcoin is safe. Number two, the fact that I think it's got a $100 million market cap. The fact that we're even talking about it makes me start to think maybe we're closer to the bottom than we all think. So maybe it's a contrary indicator. The only problem I have with these type of things is that it's a levered inverse ETF. It's based on the CME futures, which are fine. But if you're holding it in an equity position, in an equity wrapper, you have issues with the roll, and it doesn't always correlate with performance. So what I'd be worried about is somebody goes and tries to short Bitcoin closer to the bottom than the top. And even if they get the trade right, because of these futures idiosyncratic problems, you might not actually make money on it. So they're not a great way, in my opinion, to put the trade on.
Karen's waiting for a triple inverse Bitcoin ETF, right?
That's so my kind of thing. But BK, a question for you. Just going back to what is cheap, and you touched on addresses. That's the number of sort of new parties interested in or holding a position in Bitcoin. What exactly are you talking about?
Yeah, so it's addresses are like wallets on the Bitcoin network. And I think of them very much like a Twitter daily average user, Facebook daily average user. And in fact, if you take daily average users and chart it over Facebook's price over the first 10 years of it trading, it's almost a pretty good correlation. It's almost an 80% correlation. So Bitcoin is all about the network effect. any currency is about a network effect. And so if you start to see addresses growing at a fast rate, that is adoption of the currency. And if you see addresses falling, that is not adoption. That's the exact opposite. And right now, what we're seeing is addresses falling and sentiment falling at the same time. One of those two needs to reverse.
So what's fair value in that model?
Well, so fair value, interestingly, is above 20,000. But it usually stays only at fair value for a little bit of period of time, and you don't get much of an uptick from fair value. You usually want to buy it when it's cheaper.